If you run a business and choose the wrong structure, you could be giving the IRS $6,000 to $10,000 every single year for no reason. That's a vacation. That's a new car. That's money you earned but never got to keep. And most entrepreneurs never even realize it. Here's the simple truth. If you're making over $60,000 a year, choosing between an LLC and an S-Corp could save you thousands. Let me explain why. First, let's understand what an LLC actually is. LLC stands for Limited Liability Company. Think of it as a shield. If someone sues your business, they can't take your house, your car, or your personal savings. That's the limited liability part. Now here's where most business owners mess up. How is an LLC taxed? By default, the IRS treats it as a pass-through entity. That means the business itself doesn't pay taxes. You do. All the profits flow directly to your personal tax return. When you're an LLC owner, the IRS considers you self-employed. And self-employed people pay something called self-employment tax. In 2026, that's 15.3%. If your business makes $100,000, you pay $15,300 just in self-employment tax before income tax. That hurts. But this is where things get interesting. Now let's talk about the S-Corp. An S-Corp is not actually a business structure. It's a tax election. You first form an LLC or a corporation, and then you file Form 2553 with the IRS to elect S-Corp status. So what's the big deal? Why would anyone do this? Because S-Corps can save you thousands on self-employment tax. Here's how it works. As an S-Corp owner, you have to pay yourself a reasonable salary. That salary is subject to payroll taxes, just like a regular employee. But here's the magic. The remaining profit after your salary, you take that as a distribution. And distributions are not subject to self-employment tax. Let me show you with real numbers. Meet Sarah. She runs a small marketing agency making $100,000 a year. If Sarah stays as an LLC owner, she pays self-employment tax on the full $100,000. That's $15,300. But here's what Sarah did. She switched to an S-Corp. She pays herself a reasonable salary of $60,000. She pays payroll taxes on that $60,000. Then she takes the remaining $40,000 as a distribution. No self-employment tax on that $40,000. Her self-employment tax now is about $9,180. She just saved over $6,000 every year. That's her family vacation. That's her new car. That's money in her pocket instead of the IRS's. But before you rush to file that Form 2553, you need to understand the catches. Catch number 1. Your salary must be reasonable. If your salary is too low, they'll audit you, and you will lose. Catch number 2. S-Corps have more paperwork. Catch number 3. S-Corps have strict ownership rules. You can only have up to 100 shareholders. All must be US citizens or residents, so when should you choose an LLC? If your business profit is under $60,000, stick with the LLC. The savings won't outweigh the costs. If you're making over $60,000 to $70,000, the math starts to work. S-Corp is your friend. Just remember, you have to file Form 2553 by March 15th of the tax year you want the election to take effect. First, state taxes. Some states, like California, charge additional fees. Second, retirement contributions are based on salary, not total profit. And most importantly, talk to a tax professional before making this decision. This video is educational, not advice. Your situation is unique. Your business is your baby. Protect it. Structure it right. If you want more videos that help you keep more of your money, hit subscribe.